The U.S. dollar is higher after the drop of a lot of economic data at 8:30 a.m. The GDP final came in stronger than expected. We also saw durable goods higher than expected. We saw initial jobless claims lower than expectations. We saw the trade balance even get better. So all of that is dollar positive, and we saw the dollar move against all the major currency pairs to the upside. I'll go through some of the key moves in this video, so let's get started. Looking at the pound versus US dollar on the 4-hour chart, this was already moving to the downside ahead of the data, and we moved that down to test its 38.2% retracement. That is the broken 38.2% retracement of the range since the July 1 high back here to the low price that we saw at the beginning of August. That level comes in at 1.33865. Just below that level is this swing area between 1.3360 and 1.3378. Get below that level and we'll start to look toward the low price that we saw 3 or 4 weeks ago. That level comes in at 1.33309. Take a look at the euro versus US dollar. This currency pair also moved out to the downside, breaking below the 38.2% retracement of its move up from the August 1 low to the high price that we saw in the month of September. That level comes in at 1.1717. We also are trying to break below the 200 bar moving average on the 4-hour chart. That level comes in at 1.17025. The swing area down to 1.16924 is the next target to get to and through. If we get below that level, it opens the door for a rotation back down toward the 50% retracement level at 1.16549. Taking a look at the dollar versus yen next on the hourly chart, we're breaking above this target up here between 149.12 and 149, I think it's 19. That level corresponds with the swing highs here and here before breaking to the upside, trading above and below that level. We fell below the area and the 100 bar moving average here, only to return to that area right through here. So breaking above this level, this area up to with 149.12 now close support for the pair. Stay above that level, and the door remains open. We're into this extreme area. The next target will probably be this high going back to this period right through here, where the price tested the 200-day moving average at the time, found willing sellers against that level. That will be the next key target on the top side for the dollar versus yen. Taking a look at the dollar versus Swiss franc, they kept rates unchanged today. Talked about slower growth. We are seeing a rotation to the upside here in the dollar versus Swiss, lower Swiss, the higher dollar. And in the process, we're moving toward this swing area. I'm going to zoom back a little bit here to show you the importance of this area going back in time. A swing high right here, a swing high right here. Form this ceiling through here, this area right through here. We broke above that ceiling, traded above and below through this period right through here, but then moved below it again here before breaking to the upside right through here. We came back down to that area in this area right through here, and traded again above and below it over here before using that level as a key resistance here. So we're within this swing area between 0.7986 and 0.7994. Move above it opens the door for further upside momentum. Could see sellers against this level, but the Swiss National Bank was a little bit more dovish and concerned about growth. So maybe with the stronger U.S. dollar, this is the day to break to the upside for this pair. But we do need to get above the 0.7994 level. Looking at the dollar versus Canada, this currency pair has moved to the upside here as well, and trying to break above this swing area between the 1.3891 and 1.3904. Currently trading at 1.39049, so just above the high of that swing area. Get above that level and we start to look toward the 38.2% retracement. That's of this move down from this high right here, which is the March high, down to the low price that we saw in July. The 38.2 comes in at 1.39235. Recall going back a few weeks ago, the price high came right up to that 38.2% retracement, found willing sellers. So this is going to be the key level to get to and through now that we're trying to break above the 139.04 level. Close risk is 138.91.7, which is the high price that we saw a few weeks ago, and the low price of this swing area. And also was different high prices going back to this period right here. So a key level to stay above for the dollar versus Canada. Finally, take a look at the Aussie versus US dollar. We'll focus here on the hourly chart for this currency pair. And there we go. As you can see, we're breaking to the lowest level going back to this point right here, which is September 8th. Also near the swing area, or near the low of the swing area. That goes from 0.6559 and 0.6567. The low price in trade here today came right back down to the 50% retracement. We're testing that level and near the low of that swing area. So needless to say, this yellow area and the 50% retracement is going to be key for the Aussie versus US dollars bias going forward. Move below it increases bearish bias for the sellers and puts the buyers at risk of further downside momentum. On the upside, if the price were to move back above the 0.6567 level, if you want to be more conservative, back above these lows right through here, that would probably give the sellers some cause for pause and give the buyers a little bit more confidence that the bottom may be in place on the failed break on the holding of the 50% retracement. So there you have it. A look at those number of the major currency pairs after the stronger U.S. data this morning. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.